Welcome to Pro News Weekly. Let's dive into the latest updates from the financial markets. The US dollar is being dumped as a safe haven asset. Stock indices have soared thanks to taco. Gold is losing its shine for central banks. And Bitcoin can't seem to figure out its identity. Amidst the turmoil in the Middle East, the US dollar almost missed an important event, the minutes of the FOMC meeting. Now, the Fed began managing expectations, formally maintaining its stance on cutting rates, but kicking this idea down the road. In March, Fed officials acknowledged that the chances of inflation slowing down were diminishing, and not just because of the surge in oil prices. The impact of US tariffs on prices will be felt for a long time to come, and Americans' growing habit of living with high price growth will result in heightened consumer inflation expectations. The Fed indicated that it is closely monitoring upside inflation risks, although it sees a greater threat from a slowdown in the labor market. News of a ceasefire raised the chances of a policy easing by the end of the year from 12% to almost 50%. But the subsequent publication of the FOMC minutes pushed them back down to 25%. Investors realize that even a stabilization of current petrol prices will keep prices higher in the coming months, forcing the Fed to keep rates on hold. It is too early to consider monetary policy easing, just as it is too early to count on a rally in Euro USD. The surge in the main currency pair following news of the ceasefire is largely due to the mass liquidation of long US dollar positions, rather than a targeted bet on the euro's rise. Until a peace agreement between Washington and Tehran is signed, and while oil prices remain high, the Eurozone economy remains vulnerable. Since January 2025, 9 out of 10 sharp rallies in the S&P 500 have been linked to taco. So Donald Trump's threats to destroy an entire civilization had traders on tenterhooks. They were awaiting a de-escalation of the conflict in the Middle East. As soon as news of a 2-week ceasefire broke, the broad stock index soared to its highest levels since early March. The VIX volatility index plummeted at the fastest rate since the pandemic. Looks like greed has returned to the market. According to the Center for Financial Research and Analysis, current events have many similarities to Iraq's invasion of Kuwait. Against the backdrop of the escalation of that geopolitical conflict, Brent reached its peak in October 1990. This was followed by a decline in oil prices, which had a positive impact on the S&P 500. Over the following 3 months, the broad stock index rose by 12.4%. However, there is another side to the story. Miller Tabak notes that when oil rose by 60% over a short period and then consolidated at elevated levels, the S&P 500 fell by 20% or more. What will happen this time? Gold was too quick to believe in an end to the conflict and a cut in Fed rates. The opposing sides still remain far apart. Trump has declared a total victory and is demanding a large payout from the supposedly defeated Iran, which continues to control the Strait of Hormuz. If the negotiations fail, a situation similar to the late 1970s will arise, when the oil crisis sent U.S. consumer prices soaring. In response, the Fed raised rates to 20%, and gold prices plummeted by 85% between 1980 and 1999. As a result, central banks began actively offloading their gold reserves. For instance, the Bank of England sold 395 tons of gold between 1999 and 2002. Some countries, such as Turkey, are beginning to follow suit. This will put a spanner in the works for gold bulls. In contrast, the People's Bank of China has continued to buy gold bars for 17 consecutive months, adding another 5 tons in March to its gold reserves. Bitcoin continues to trade within a relatively narrow range, between 65 and 75,000. Even news of a ceasefire in the Middle East triggered only a brief surge in the price. De-escalation should work for risky assets, which did happen with crypto, but 2 days later, it had lost almost half its gains. Investors still cannot figure out which asset class Bitcoin belongs to. The rise in Bitcoin alongside the S&P 500 following the US-Iran truce suggests the coin's high-risk sensitivity. On the other hand, crypto-focused ETFs attracted $1.4 billion in March after 4 months of outflows, underlining their status as a safe haven. Investors can only hope for the best, just as strategy does. Michael Saylor's company held $50 billion worth of Bitcoin at the end of the first quarter. It accumulated $14.5 billion in unrealized losses between January and March. The market's attention will, of course, be focused on the US-Iran talks. Donald Trump claims a total victory for the Americans and is demanding a windfall in the form of substantial sums of money. This is likely to be in return for allowing tankers to transit the Strait of Hormuz. For the time being, Iran is the one receiving this payment. Is Tehran prepared to share? For now, it is putting forward a 10-point plan for a peace agreement. At the very least, one of them, a non-aggression pact regarding Lebanon, is being violated by Israel. Among the events on the economic calendar, releases of data on Chinese foreign trade, GDP, retail sales, and industrial production are worth noting. Australia will publish employment statistics, which will help clarify the Reserve Bank's stance. Does it intend to continue the cycle of monetary tightening that began in February and March? Among U.S. data, producer price statistics and import and export prices are worth highlighting. The data will help clarify the outlook for inflation. It is precisely this that the Fed is paying close attention to. According to the central bank, the chances of a slowdown in CPI and PCE are slim. This means that rates should be kept on hold, which supports the U.S. dollar. Keep up to date with global market developments in Pro News Weekly. Like, share, and subscribe.